Hello and welcome to an episode of Monday Markets. As always, you're brought to you by Woo. Links available in the description below. Woo is also running a MacBook giveaway. Usually these are quite scammy by exchanges and your odds of winning are shit, and there are a bunch of terms and conditions attached. This one is pretty straightforward. If you sign up, deposit $100, you become eligible. Woo isn't a massive exchange and we don't have a ton of refs, so if you want to go through that, I think your odds are better than they would ordinarily be. So if that's of any interest, check it out in the description below. There's a link to a Google form there. Now, about the market itself, after 2 down weeks with long wicks, we are back trading quite close to the all-time high. So if we look at the anatomy of this move up, the market was essentially sort of, recovered at the lows, started creeping up and moving sideways, and then started really ramping up around the US Open today. Open interest increased, from the pump, let's say, to current levels, about 9-10%, and price increased about, if we measure accurately, 6%. That's nothing particularly crazy. Obviously, the funding rate spiked as well because perps were getting long this thing. As long as it doesn't just full-on BART collapse, it's not the end of the world that there's a sort of increase in the premiums, the difference between the index price and the perp price. What we've also seen from time to time with these funding spikes is that you might think that, this is just a lot of leverage longs, they're getting too aggressive, but this can kind of neutralize or even out without the market doing anything crazy. So one pattern that I remember seeing a lot on the walk up is that you would have this sort of price increase, open interest increase, and premiums spike as well. And then what happens is during the consolidation, the market participants in this sort of subsequent price action start shorting. And what that does is open interest might come down a little, but generally stays around the same levels. But what happens with the premium is that it comes down significantly because the perp price is being pushed down by the shorts closer to the index price. And that sort of neutralizes the funding to a more sort of baseline level or closer to baseline. And then the consolidation without any follow through just resolves to the upside. So what you get in those instances is sort of spike during the move up, and then it sort of evens out during a consolidation, and that's generally indicative of perps being more aggressive on the short side, and then those shorts get blown up by a move higher and usually get a bit of a spike or sort of decrease in open interest on account of those liquidations, and those will also be visible here. So that's one thing to bear in mind during the course of this week. I'm not a huge fan of chasing Monday rallies, but with the flows that we've had, I don't think the weekday significance is quite as high as it has been. Just for those of you who are interested in lower time frame order flow type of stuff, keep an eye out for funding neutralizing, but the market not breaking market structure and going sideways instead. That tends to be quite interesting and would suggest that shorts are piling in, and unless the market breaks down and pays them, they might end up being fuel for a leg higher. So that's just one dynamic to keep in mind. You can find examples of this if you go back far enough on the 15-minute, those types of patterns of you sort of on the way up more so than not. Spikes in funding, market comes in and tries to short it, price just goes sideways, premiums come down, and then it just blows up higher and takes out those same shorts that got impatient. So just like with any other premium/funding analysis, if there's a spike, that's okay. It only becomes a problem if the market starts to break down, really, or if there's a really large increase in premiums, but the market just stalls. So just a bit of commentary there, nothing too crazy. If we look at the basis on quarterly futures, it's back up a little bit. Binance leading the way at 24%, but that's from a low of, from a recent low of 22%. So nothing, it looks worse than it is. It's sort of more or less around the same level that it's been the entire time. And similar with perp funding rates, it's, 20 odd percent, not the end of the world, roughly in line with where the market has been trading more recently. From the TA point of view, if we look on the weekly time frame and measure the move from high to low, and this isn't going to be the primary time frame for, I think, the most pertinent analysis, but nonetheless, that's a 17% move down. You'll recall in one of the Monday Markets episodes, we talked about the average all-time high spike corrections taking, a couple of weeks and roughly being of the same magnitude. So the most bullish outcome for this is that this 2-week move lower, if it can be called that, was the all-time high shakeout, and then you get trend continuation. So that's something to bear in mind. I don't think there's anything else particularly interesting on the weekly unless this thing starts to roll over. For me, rolling over would be sub 59k. That would make the monthly and the weekly look like a failed breakout, and then we could position for or look for deeper corrections, but that simply hasn't happened at the moment. The daily time frame and the 4 hour are the time frames that I will be focusing on this week, so let's move to those. You'll recall on Monday markets, we talked about this cluster of support at 61 to 62K. That was tested once, offered a bounce that seemed weak initially, but the level held once again, and this is quite a strong move from the range lows. The only other relevant structure that I have on the daily is the old range high, which we also spoke about at 68.4K. So I think a daily close above that is good. That's just a sort of breakout signal, and the anatomy of this thing basically ends up being 17% dip, hits support, and then immediately reclaims resistance, and that doesn't look bad by any means. That's quite strong, if anything. If we then look to the 4 hour, that's where I think these levels become particularly interesting, because the daily level lines up perfectly with the 4 hour range high. And so that provides at least a short-term invalidation, which is to say that if this thing is going to threaten the highs, and if this is the breakout that takes the market on a multi-day trend at the very least, then at this point, having already hit support twice and broken resistance, if the market is strong, it really shouldn't be losing the recently reclaimed 68.4K level. So that provides both a short-term invalidation, but also if there are any deeper pullbacks, you'd want them to hold on a closing basis at 68.4, at least on the daily time frame. I think that makes sense. I really wouldn't want the market to go back down to 61, 62. I think it's kind of done everything you could reasonably expect it to do down there. You even had a nice over-under structure post-casual Friday FUD when you had the low, the test itself, and it came in and barely spent any time there before shooting back up. And if you look in general at 61, 62K, there's been a lot of business done sort of in this area at this level. So it would be a sign of weakness, I think, if we were to go back there. I'm not a huge fan of finding or adding resistance levels so close to all-time highs. If you really wanted to, you would just take the mini pre-breakout range between 72K and let's say 71.5. And so if you wanted to be really short-term technical about it, this is what you're dealing with for this week for short to medium-term trading. Anything above 68.4 looks strong. 70, 72, well, 71.4, 72.1 is resistance, but not like a super compelling resistance because it's so close to all-time highs. So realistically, the setups this week would either be breakout continuation through 72. At that point, that would become your new invalidation if the market's trading above it. Alternatively, if we get a dip either from this level or before reaching it, the pivot or inflection point is at 68.3. So really, that's my focus for this week. And with the higher time frame lens in mind of being so close to all-time highs, and generally being in an area where there's an absence of high time frame resistance, one way you can modify your short-term trading is that if you'd normally just trade, let's say 71, 72 is one level, 68.3 is another level, and you buy support, sell resistance, or you sell resistance and buy support. One thing you can do if you want to hold on to those positions and sort of morph them into a higher time frame hold is if you get a dip to support, you make your target not the resistance itself, but actually expansion through the all-time high. Or at the very least, you keep some portion of the position through resistance on the assumption that it's so close to the all-time high that continuation is more likely than reversal. So I think that's what makes sense to me. I'm generally going to be less competent, just from knowing myself, at breakout trading 72 plus, but if that's your cup of tea, momentum at that point might just carry you through to the highs. Alternatively, if there are dips and some of this sort of walk up TWAP price action that we saw with a large increase in open interest, if some of that gets flushed, ideally you'd want it to either happen on lower time frames where it doesn't have much of an impact, just like a short-term spike or something, or at an extremity, if you get a visible dip, that visible dip, assuming strength, shouldn't really falter below 68.4. So in a nutshell, it's some version of, if you're trading the 72 breakout, the 71, 72 level becomes your new invalidation if the market's above it. If the market dips first, then you're either looking at funding to neutralize / a bit of an open interest wipeout, wherever that may take place, or if it's a deeper dip, there's only one level that makes sense from a proximity to invalidation perspective, and that would be 68.4. And at that point, you wouldn't just, well, at least I wouldn't just hold it to resistance. I'd look to see if it would offer something greater than that, which is expansion through the high. Okay, so that's kind of the focus on BTC. It's not too terrible. It's nice when you have at least very clear levels and inflection points to focus on. In this case being reasonably high conviction importance 68.4, medium conviction resistance 71.4, 72.1. But ideally, this isn't the type of level that just turns the whole thing around and nukes it, but rather something to let you catch a portion of this move and offers you a dip to position for hopefully a bigger move. So that's what makes sense to me. Again, not a huge fan of chasing Monday open drives, so ideally there's some structure formed around these levels on Tuesday, Wednesday, Thursday, that type of thing. On the ETH front, not a lot has changed. ETH BTC, more or less, just kind of still doing the same thing, right? It's, I don't want to read into this too much. There have been pockets of short-term strength, but just in general, just looking at this chart, I don't find it super interesting, to be completely honest with you. At this point, either like massive strength or massive wipeout on ETH BTC might pique my interest. Absent that, I'm not going to sign myself into the asylum that is the ETH BTC chart. Alternatively, ETH USD, I think for weekly time frame swing traders may become interesting, not least because a couple of things have happened. One is that we spoke about this weekly level on Monday markets, and that pretty much ended up being close to the low, depending on the exchange, at 3K. So that's a very nice bounce if anyone managed to either layer some bids or trade around that extremity. Although, I mean, really didn't spend much time there. You probably had to be slightly more aggressive there or lucky. Alternatively, if you're on the buying strength point of view, then the same level that we discussed as a reason for ETH BTC weakness, which is the 3,900 weekly level, I still think that's pretty relevant. So that even if the lows didn't make their way into your trading journal, at this point, this is one of those structures we've talked about ad nauseam on the channel, where you have resistance, overshoots, and then active resistance again. So kind of this failed breakout resistance level. That tends to be a very good bearish setup, but a failed bearish setup is a bullish setup. So if that's not enough to keep this thing down or send it to lower levels of support, what have you, then a weekly close back above 3.9K would be a valid, I think, technical at least breakout trade towards the high and hopefully onwards. Now, whether that outperforms BTC or not depends entirely on context or whatever else, but just in a vacuum on its own terms, 3.9K weekly level for ETH is good. And the, where was this? 3K support has been hit. I wouldn't love if it started to retrace and sort of come back there. It's still probably puntable, depending on how it gets there. But for the time being, if we look at where the market is relative to these levels, the big breakout level is a bit higher. The support level we spoke about has already been hit, and there's been a reaction. You're arguably diddling in the middle here, at least from a higher time frame swing perspective. As always, if you wanted to play lower time frame games, then you'd essentially be forced to do business at the midpoint, which isn't the worst case in this instance, because even eyeballing sort of between resistance and support, you get roughly 3.5K. That's not a terrible level, but again, that would have to be very short term only. On the altcoin front, perhaps you'll be pleased to know, or to your dismay, I'm sure you can let me know in the comments, we're bringing back altcoin Thursdays again. So that's a much easier show on which to cover these at length and maybe even pry some low time frame insights from Don. So that's all I've got. It's a quick one, but hopefully it makes sense. Again, my focus is twofold. First is to see what happens with this walk up. A lot of the time there's a bit of a pullback once the more TWAP type price action stops. But what's more significant than that is whether we get this pattern where the spike in premiums essentially gets neutralized and price kind of neutralizes a little bit as well, but then gets shorted during the course of this consolidation and then pops up and blows up those new shorts. So that would be, I think, an interesting intraday setup. That's one thing I'm focused on. Alternatively, if we just get a big open interest wipe, I think there's a mean reversion trade there. So focus number one is sort of twofold. It's short-term order flow stuff, either premium neutralization or open interest wipeout. I think those are always fun trades in this market. And focus number two, from a more technical perspective, is either 72K plus breakout trade towards all-time highs. I'm less likely to take that because I'm not a fantastic breakout trader. Alternatively, if the market pulls back from here, I think that 68.34 level that we discussed is also on my radar as one of the focuses for this week. So hopefully that makes sense. As always, the show is brought to you by Woo. Check out the MacBook thing. It's not scammy, rather straightforward sign up, deposit type incentive. And yeah, leave a like, subscribe to the channel, and please look forward to Altcoin Thursday while we overhaul the newsletter. Thank you, and hope you all had a wonderful weekend. Bye-bye.